I would expect to hopefully see Bitcoin over 150,000 in the next year. Not sure that's going to happen, but that would be my base case. Gold, I would like to see us touch 3,800, maybe 4,000 in that time. I wouldn't be surprised if it takes a little longer. When we look out 5 years, Bitcoin is very volatile, so I wouldn't be surprised if it say touched quarter million or even multiple hundred thousands and then corrected back down by some significant degree. But I think if we don't see a quarter million in 5 years, that'd be kind of disappointing, potentially higher. For gold, in a 5 year time frame, 4,000, 5,000, potentially much higher becomes reasonable over those time frames.
The era of passive portfolios and blind faith in fiat is coming to an end. Investors are awakening to the slow erosion of currency value, soaring debt-to-GDP ratios, and the growing appeal of assets that can't be printed. Price targets are no longer just numbers, they reflect mounting distrust in traditional financial systems. As macro uncertainties grow and digital assets mature, the focus is shifting toward long-term resilience, not short-term speculation. Amid this landscape, Lyn Alden offers a forecast that is both pragmatic and bold. Speaking in her measured tone, she outlines a base case where Bitcoin could surpass $150,000 within the year, not as a mania-driven spike, but as a rational repricing of scarcity in a world of excess. Her outlook for gold is similarly firm, predicting a slow but steady climb toward $3,800, $4,000. Looking out 5 years, her conviction strengthens. Bitcoin at $400,000, gold at $5,000. These aren't hype numbers, they're mile markers shaped by policy, volatility, and time. If her projections hold, the next half-decade won't just reward risk, it will reward clarity. Cybercriminals are getting smarter, and everyday investors are the new target. You worked hard for your crypto. Don't lose it to a scam. Recently, attackers bribed offshore agents at major crypto platforms, stealing names, birth dates, even social security numbers. They drained real accounts in seconds. No blockchain hack, just human error. Once it's gone in crypto, it's gone. That's why ITrust Capital created the Premium Custody Account, the most secure way to protect your asset. It's a closed-loop system, meaning funds can only move between you and your account. Even if someone gained access, they can't steal your crypto. Backed by institutional-grade custody at no extra cost. Sleep easy knowing your investments are locked down. Click the link, use code DOSE7, and get a $100 funding bonus. Start protecting your future with ITrust Capital.
First part of the discussion touched on that, which is gold flipped the dollar for the first time in a very long time as the biggest reserve holding of central banks. So that's like a first start, and it's still smaller than it used to be. We still are primarily, countries are holding the dollar and other currencies collectively are bigger than gold. But now gold is kind of both from tonnage and from price appreciation reasserted itself kind of, back into the fray. I expect that trend to continue over the next 5, 10 plus years. Bitcoin is about 1/10 of the size of the gold market. So it has more growing to do before it's interesting to kind of non-outlier sovereigns. So far we've seen El Salvador, Kingdom of Bhutan, UAE. They've shown some interest. Countries like that have shown some interest in Bitcoin at the sovereign level and have generally been rewarded for it. It's generally not big and liquid enough to be kind of interested to the larger countries. As Bitcoin gets bigger, I think it's also potentially in the conversation for that, and that you can see that that's part of the multipolar set of assets that entities can hold. But basically, the really two big supranational currencies I think we're talking about are gold and Bitcoin. Right now, gold is by far the choice. The interesting thing about Bitcoin is it also settles some of their concerns around payments. So gold is obviously it's a great store of value. It's harder to actually send. Generally, you use a chain of credit to do it. It's hard to actually send tonnage around. It's expensive. For example, Germany's repatriation of its gold took many, many years. Even though it came in faster than they expected, it still took years, and it cost millions of dollars to do. Whereas Bitcoin settlements, you can send $1 billion Bitcoin settlement and wait for multiple blocks to confirm on the blockchain and send it in like half an hour or an hour. So that is kind of this open source non-dollar network that countries could eventually shift to. But I think this will take time. I think again this will be one of those 5 to 10 year things as Bitcoin potentially moves from a $2 trillion network to a $5 or $10 trillion network, At that point, it's large enough where it's more like the size gold was, 5 years ago. And then that's potentially pretty interesting at the sovereign level. So I think as the dollar has that kind of 5 to 10 year set of ongoing problems that I've talked about, like it already had over the past 5 years, I think that'll be the similar time frame where we'll see the ongoing one. You see the diversification of currency, so around the margins, a little bit more interested in China's currency, especially among all these kind of non-U.S. aligned BRICS type nations. And then two, you see this increased ongoing interest in gold and to a lesser extent Bitcoin. The path over the past several decades was that basically sovereigns would hold gold for the portion of their assets that they hopefully plan to never have to sell. And they would hold treasuries for the portion that is generally more liquid, that they can liquidate in a day, potentially if they wanted to. And then, of course, there were various political reasons why they would hold more in dollars than they probably should have. And I think you could see a similar thing where sovereigns want to hold gold that they hopefully never sell, kind of like how I think many individuals should own gold that they hopefully plan to never sell and leave with their kids and just it's kind of rainy day gold. Whereas Bitcoin is more liquid, especially because it gets larger and quicker to move around. So I certainly think on the sovereign level, you can see that kind of by monetary standard, where they hold both of them for different reasons.
Gold has just overtaken the dollar as the top reserve asset held by central banks, a shift few anticipated, but one that has been building for years. While gold reinforces its legacy as a stable store of value, Bitcoin is quietly entering the conversation. Smaller, yes, but faster, borderless, and designed for the digital age, Bitcoin is already being tested by some nations. The future isn't a choice between one or the other. Gold offers stability, while Bitcoin delivers speed and adaptability. According to Lyn Alden, as trust in traditional systems wanes, a new monetary mix is forming, quietly, steadily, and on its own terms. Let's dive into more clips from her interview to explore this evolving landscape.
So when I did interviews earlier this year, I said my base case was that they would ring fence their existing coins, but probably not accumulate too much more. So far, that's the track we're seeing. They legally separated their coins. They don't want to sell them anymore. They also put Bitcoin and other cryptos in different buckets, so they can sell other cryptos while they're not supposed to sell their own Bitcoin. So one of the budget neutral things they can do is sell other cryptos and use the proceeds to buy Bitcoin. That's one option. The ongoing confiscation of any sort of digital asset for any number of reasons could also be sold and used to buy more Bitcoin, or if it is Bitcoin, added to the reserve. So those are potential options. There are potential gold revaluation options, or similar kind of quote unquote budget neutral things that can be done to add some Bitcoin. I would expect to be pretty muted. They could surprise to the upside, certainly, but I wouldn't really base my investment decision on it. I would say that I'm bullish on Bitcoin without the U.S. government buying any more, and if they do happen to buy more, that would just add to the thesis. There are other things they can do to kind of add to the quality of life of Bitcoiners. They can, for example, and this is some politicians have been focusing on this, which is to make it so that under a certain threshold, certain Bitcoin transactions are not taxed. Right now, if you buy coffee with Bitcoin using the Light Network, for example, that's a taxable event technically. And there are ways that can just make that easier. That allows more payment innovation without worrying about de minimis types of taxes, which I think would be healthy. That basically allows the citizens to use Bitcoin more rather than just stash it on the sovereign level. They can also potentially, strengthen their stance on privacy. So far, I think we've seen a little bit less anti-privacy action in this administration compared to the prior one, but there have been ongoing kind of legally troubling cases around privacy, even non-custodial privacy services, and so that's other things that I think are maybe not talked about enough when everyone's kind of focusing on the reserve. So I continue to expect neutral to slightly up on Bitcoin reserve. And then depending on what happens with the next administration, depending on the next election outcome, I wouldn't particularly expect a Democratic president to add to it. Potentially could even reverse some of it, could go back to selling it, because that's only been done by executive order. That hasn't been congressional law. So they would have it in their right to liquidate it on day one if they really wanted to. So that is potentially as ephemeral as other types of Bitcoin buyers. I think there has been a shift. I mean, in Trump's first term, he was more anti-Bitcoin. And there's been I think it's been proven that in this, especially this past election, that being in any way anti-crypto and it's especially anti-Bitcoin is not really a winning strategy for elections. There's no marginal vote that a politician gets by adopting that position, and there are plenty of single issue voters and funders for being conducive toward the industry, and so I think that's a new trend. And then two, yeah, they find that they want to own it themselves. I've also been critical of the meme coin trend. I think that
Yeah.
that's a grift that we see not just in politics but just globally. So I think that there's some that have coined it the golden age of fraud or the golden age of grift, and I think we're kind of in this more this blend of politics and capitalism. And I don't know, it's an interesting environment. I generally am skeptical on a lot of these things. Like I've been skeptical on the size of the Bitcoin strategic reserve, skeptical on kind of the right types of policies coming, skeptical on kind of the citizens' right to financial privacy. And so I tend to take good news with somewhat of a grain of salt and instead look toward tangible things that are happening. And there have been some. It's certainly a better environment in the space. I think one of the other things that goes under the radar is Operation Choke Point 2.0.
Yeah.
And so during the prior administration, there were clampdowns. If you were a Bitcoin or crypto company that merely had a bank account, there were all these attempts to kind of push you out of the banking system. There are many companies that had to go offshore that were just kind of facilitating payments and things like that. And the regulation environment has much improved for many of those. I wouldn't say it's over, and they're still raising concerns. There are those that are still raising concerns that this is not kind of fully addressed yet. But that has certainly moved in the right direction under this administration compared to the prior one.
While gold is reclaiming sovereign trust, Bitcoin is quietly making strategic inroads from a different angle. Rather than large government purchases, we're seeing subtle shifts in how it's treated. Protected reserves, policy adjustments, and legal carve-outs that signal long-term intent without direct accumulation. Meanwhile, the private sector is moving decisively. Politicians and family-run companies are stacking Bitcoin as a bet on the future. It's no longer just about reserves, it's about cultural alignment, network relevance, and staying ahead of the curve.
Do you see quantum computing as an existential threat to Bitcoin?
Not in the near term. Potentially longer term, it's one of the bigger hurdles that might have to be overcome. I try as best I can to defer to the technical experts in this area. So I directly talk to those who either are involved in quantum computing, those who have proposed updates to Bitcoin to further make it resilient against quantum computing, and things like that. Those that are trying to build companies that are addressing potentially some of the quantum vulnerabilities. The short answer is that Bitcoin is upgradable. It already gradually updates over time. Most of those are not consensus changes. Some of them are consensus changes, more rarely. And so with Bitcoin, the main vulnerability is not the core encryption itself. It's not as though the first time you have a quantum computer, it can just unravel the whole Bitcoin blockchain. Instead, certain signature types become increasingly vulnerable should there be a sufficiently powerful quantum computer. And so one of the first steps that people can do is, if they're in those generally very old address types, they can move them and take other practices to defend their own coins against potential security issues related to quantum computing, should it materialize faster than people think. And then two, the Bitcoin network itself does have some potential soft fork updates that can add new signature types that are more quantum resilient than even the better ones are today. Generally speaking, the downside is that they come with more block space. So in Bitcoin, there's kind of a limited amount of block space per block because it takes up bandwidth, it takes up storage. And so you generally don't want to use a bigger signature type than you have to. But should that day come, or should developers and investors get worried that it's coming soon, there are upgrade paths to protect it. So my general view is that it's not a non-issue. I have put considerable time into talking to the people that directly work on it in their programming or in their other capacities. And I'm satisfied that the Bitcoin network has methods to circumvent it. I also don't think it'll hit in an investable time horizon of, call it, 5 years. But I do think that I am glad that there are people that are already sketching out which signature types make sense, what types of upgrade paths would be doable, and things like that. So I don't view it as a likely existential threat, but I do think it's one of the ongoing serious risks that people do have to consider. So if it hard forks, now some of these changes can be done with soft forks, potentially. Other ones might require hard forks. If you have a hard fork happen, the chain would split into two. Ostensibly, one of them would be more quantum resilient than the other. And any current holder of Bitcoin would now have that number, but they'd have both coins. Now, historically, when Bitcoin has done hard forks, I mean, anyone can do a hard fork. I could do a hard fork this evening, just no one would buy it. So anyone can do hard forks. It's open source. But in Bitcoin's history, there have been a handful of serious hard forks, meaning that there's an amount of scale behind it. There are a number of large buyers, large miners, things like that support it. Historically, the hard forked coin, the one that's no longer backward compatible with the existing node network, that has historically not done well. That generally will fall in price and that value will get reabsorbed into the main chain. Now, should there be a scenario where quantum risks materialize and there's a quantum resilient hard fork, that's a possible scenario where the newer fork is the winner and becomes the new main Bitcoin. The way that users can protect themselves is if you just hold both coins, you get the benefit of whichever one wins. It reabsorbs the value of the other one. So, for example, when Bitcoin and Bitcoin Cash split, if you did nothing, you still hold all the Bitcoin you had pre-split, and you'll have an equal number of Bitcoin Cash, which is worth de minimis now compared to the Bitcoin, but you haven't lost any of the Bitcoin that you had. On the other hand, there were some, say, experts at the time that had very high conviction that Bitcoin Cash was not going to win, and so they could actually sell their newly generated Bitcoin Cash and even increase their stack of Bitcoin. So someone's high conviction, they could be right or wrong, but they can sell the fork that they don't think is going to win, double down on the one that they think is going to win, so it's an opportunity. But if someone's not sure, which is probably the vast majority of people, they just can hold both just by doing nothing, and they get the benefit of whichever chain wins. The fork is decided by the market. And so, for example, when Bitcoin and Bitcoin Cash split, the market decides what is the true Bitcoin. And so by simply holding both, it is true that now there's 42 million coins because you have 21 million Bitcoin, 21 million of this fork, but that fork devalues. So Bitcoin Cash is worth like 1%, for example, roundabouts of the Bitcoin network. And so it didn't really take any share other than the first several months of that contest. So there's this kind of brief period of time where there's this narrative clash. But then when the dust settles, actually, I would say it was actually a strong case for Bitcoin being hard money because you had major exchanges, major miners all trying to forcibly change the Bitcoin network. And all they did was basically create their own copy of it that then slowly disintegrated back into the main Bitcoin chain, at least all of its functional value. And so Bitcoin as a software network can update over time, but kind of like how USB became USB 2 and became USB 3, and kind of like how Ethernet has, the Cat 6, Cat 7, Cat 8 cables that underpin network connectivity, they all update and get faster over time, but they're still backward compatible. They're still kind of their core system. That's generally how Bitcoin updates. And so it's this period of time where it does change, but it's not as though there's one central issuer of that change. It's a distributed network. And so only very high consensus changes are able to make it into the network and become the new dominant network. And so when you compare, say, Bitcoin and gold, they've got pros and cons. I mean, gold is this, 1,000-year-old monetary asset. It has the downsides are that it grows something like 1.5% per year indefinitely. So you get that kind of long-term debasement at a pretty gradual rate. In addition, it has portability issues. So if you're, living in Lebanon and you want to take all your gold and go to another country, good luck. I mean, there's certain, especially in fiscal dominance or capital controls or things like that, there can be all sorts of frictions against moving self-custodial money. Like I said, I live part of the year in the US, part of the year in Egypt. It's not like I can just I'm not going to bring all my self-custody gold with me at any given time. If I'm going to have access to my own money, something like Bitcoin's more useful to have this kind of geographically segregated multi-signature setup, for example. And Bitcoin has that portability
Right.
that gold doesn't have, but it does come at the cost of there is this technical complexity. It's a 16-year-old network. It's 1/10 of the size. It's less understood than gold, and so there are these trade-offs between these two types of monetary assets.
Meanwhile, the stars might be aligning for Bitcoin, not through hype, but via slow, powerful shift. Coinbase CEO Brian Armstrong recently suggested there's a strong chance Bitcoin could reach $1 million before 2030. That bold prediction fits neatly into the framework Lyn Alden has been outlining, a world where Bitcoin and gold rise together as parallel reserve assets in a multipolar economy. Regulatory clarity, smarter policies, and institutional capital are the key drivers. Add the possibility of the US holding Bitcoin on its balance sheet, and you have a blueprint for sovereign-level FOMO. Armstrong's view isn't just about price, it's about positioning. If Bitcoin continues to scale, integrate, and evolve, 7 figures may not be a moonshot. It could become the new anchor of the financial system. With network upgrades and a shifting global financial order, Bitcoin isn't just surviving, it's quietly stepping into its prime. As Lyn Alden outlined, the long-term roadmap is clear. What's your base case for Bitcoin over the next 5 years? Share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.